take a huge amount of risk in exposing the company to a higher effective tax rate. So these are some of the issues that they would need to be mindful of. With this, my presentation is completed. So if there are any questions on the customer part, as well as any of this part of corporate governance, I'll be very happy to answer them.
Can you throw some light on the provisions of the Companies Act 2013 relating to transfer pricing, like between the transaction between related parties,
right,
which are otherwise not covered within the TPA provisions?
No, I think in a sense, in the transfer pricing regulations, the coverage is much wider. So it's not that Companies Act 2013 and the coverage thereof is trying to extend the scope of transaction which is there in transfer pricing. So if you start with the concept to say that what is already there as an arm's length price, as related party transactions, I think you are adequately covered to look at the Companies Act 2013.
So for example, there is a sale of goods to domestic related parties.
Right.
That is not covered in the domestic TP also. So whether in respect of that also compliance is required?
No, because then it goes out of the realm of transfer pricing. Right. For that reason. Therefore, you may not want to look at transfer pricing regulations to give you any support for your domestic transfer pricing. Domestic transactions is covered. So it's not domestic DPP transactions that are factored into.
So, but whether Companies Act requires the board of directors to ensure that that is also at arm's length price, so that to comply with that they will come to us saying that you say just analyze it and whether it meets the arm's length price or not.
Yeah, so there are two different levels of test over here. That number one is that if there are transactions with related parties, it is to do more with the true and fairness of the accounts. So that's the first test that is there. The second test, of course, is if these transactions are also covered under transfer pricing regulations, the arm's length pricing has to be looked at. So you need to look at it to different domains, put it this way.
His perspective is that under the new Companies Act,
right,
what has happened is all the transactions between the related parties, you have to now more or less certify that they are all at arm's length.
Quite right.
So what has happened is the current audits have already started. They literally closed their audits during the month of April, May.
Right.
And they are already asking for tax certifications from the tax guy who's doing the transfer pricing. And they are just trying to say just don't cover these transactions, but each and every transaction. So now the concept would become a lot wider, though the income tax is not covering that.
No, I do agree. I mean, it's not that you can walk away from this situation in terms of justifying the price that is paid to domestic related parties. All the same, the tests which are there for the pricing for the related party which are not covered for domestic transfer pricing are very different. Not necessarily the same, if I put it that way. So, despite the fact that you as a tax advisor would be asked to give a view of the subject whether the prices are relatable, this is clearly not a transfer pricing issue in my view. So that's the way I would look at it.
On this judicial precedent, it is stated that customs valuation methodologies is not accepted so far as the international transfer pricing perspective is concerned. Now, by the introduction of Rule 10BA, where the other method is prescribed, now can there be another rule that residual value is prescribed under the custom valuation rule? Would be the another method which could be accepted by the income tax transfer pricing?
You may take a stand like that if the other methods are not applicable, but the difficulty also would be is that if the tax officer does not agree with the method that you use, you are back to square one. I mean, in a sense, you can go back to the other method and the Rule 10A, AB, and also look at residual method and the Rule 9 as far as custom valuation rules are concerned. But is it alleviating your problem? Probably my answer is still no, because it may not be the most appropriate method as a starting point in the transfer pricing. So that being said, if you are not able to have a pricing discovered on any of the other methods and then you go for other method, that's a different perspective. So, but by purely going to other methods and saying this is the price I want to take into account, cannot take you away from the risk. So, officer may still want to say cup is the most appropriate method in your case, if there is an uncontrolled transaction available.
It's a slightly different question, not relating to this, but on transfer pricing. Suppose Indian company has a wholly owned subsidiary in USA, which receives dividend from its subsidiary. So to justify this kind of transaction, which method will follow and how will it justify that it is an AMP?
In a sense, this is not a custom issue because customs really cover tangibles, but now dividend income as such, I mean, it's a difficult question in terms of how to justify the ALP of dividend that you receive from a wholly owned subsidiary. So I think I mean, you will need to go to the methods and justify it, and then look at whether there is a method that you can apply in a situation like that.
I cannot think of any method or any methodology which can
Yeah, I mean, I think I can't disagree with you, and I cannot think of a method.
Sir, in case of EPC contract, with the interplay between the customs regulation rule and ITP, there would be an issue.
Quite right.
Say, in that particular method where the composite contracts are to be held, these are the composite contracts of EPC, there is no separate bifurcation. Can I say that the customs rule, so far as the offshore supply is concerned, and so far as the other services are concerned, the ITP valuation rule will apply? How the interplay between customs valuation and EPC contracts?
Yes, I think whether you take EPC contract or a plain simplicity report, I can't seem to think there is so much of difference there. And essentially you need to go back to the valuation rules under transfer pricing as well as the customs. Obviously under the transfer pricing we need to look at the arm's length price discovery, whether it's an EPC contract and imports under an EPC contract for offshore supplies. As far as customs is concerned, again it's a question of does it come into the transition value method or not, number one, and if it doesn't, then can you look at the other methods that are prescribed under the valuation rules. Because of the divergence of both the regulations, the trade does not meet. So they go into different directions. So unfortunately, to find a convergence on this particular price, that can be agreeable to both the parties, is clearly not in the offing. The only way to really look at how do you minimize a controversy as far as a taxpayer is concerned is to look at AP as one way to resolve a problem. But of course in EPC kind of context, it's not something that's going to have a long fetched value for you. EPC contracts have a life in probably not 5 years. Of course, but you can look at an advance ruling for import for that purpose to at least de-risk from a custom exposure, because and there the controversy could be very large if I put it. So I may also want to add, and defining from what you said, is that in a plain simplicity of reports, the rules of the game are a little different. Whereas it comes to EPC, there's always an allegation of services embedded inside the price. So the customers are much more keen to understand what other services are provided, whereas you try to reduce the cost of imports. In that case, I think the risk in customs is also fairly significant and large. I think probably, I can't say categorically in a blanket statement to say it's larger than the transfer pricing risk, but clearly a very large risk in EPC contract for imports. And therefore, I think one of the ways to mitigate, don't look at transfer pricing, look at customs regulations as independent regulations and maybe go for an advanced ruling. That's what I would probably want to say.
We just talked about EPC contract and trade-off between the transfer pricing and the customs. But practically, is it right to say that custom duty is a lesser peril in the sense that you get, in most of the cases, you get the credit for the customs duty for the manufacturing, whereas as far as transfer pricing income tax is concerned, you don't get any credit.
I think there's a fair point to make is that if you pay a larger custom duty, it gets added to cost, which is deductible. But there is no rocket science to say that you pay a higher cost and then ask for a reduction. Anyone can do that. So it's not saving money as much because
Custom duties which are found to be paid higher on the basis of allegations are not convertible, or are not getting credit for excise duty or payment of duty, because there is a rule in that.
Right. So I think these on the
even if you accept and pay a higher duty at the beginning only.
Yeah, and at the same time, so if you imported a higher cost and there is no misgiving that there is an evasion of duty, in that sense, are you not able to recover the cost? Is the perspective. And I think fair to say that yes, it's a deductible expenditure from a computational perspective, and you can claim the duty paid as a part of the cost of imports to reduce the tax income, but that's not something that is a tax beneficial method of dealing with the situation. Also the fact that of course if there is a transfer pricing adjustment made in assessment and there is a tax to be paid, is not a deductible expenditure. Tax is not a deductible expenditure at the end of the day. So I think there is a give and take, but I think neither of them are really a pleasing outcome to look at. So I'm not to say that I'm more happy to see that I pay more custom duty and I therefore save taxes. That's not the canvas, if I may put it. But yes, I think a good observation to say that it unfolds differently. It doesn't fall the same way. So thanks for a patient hearing and invitation to your
We request your board area to propose a value without vote of thanks.
Thank you, Devendra Bhai. It's a honor casted on me for carrying out this pleasant task of vote of thanks. Friends, Milind Bhai at the start had talked of CIT giving a chance to look into the subject where he has not dealt in a lot. But the masterly convergence and the analysis presented by him on the subject of transfer pricing and customs has been an eye-opener and a great takeaway for all of us. On behalf of CPC and all of us, sir, we are very thankful to you for sparing your valuable time and the knowledge sharing that you have given to us. I request you all to carry out this vote of thanks with a loud.